Good morning, everyone. This is Mike Minter, Chief Investment Officer with Financial Synergies, and we are looking back on last week, which was the final week of February for 2024. I can't believe that's gone already, but we are now into the first week, well, I should say first full week of March. So let's get into what happened last week in the markets and some economic factors that contributed to that. So very strong week in the markets across the board, as you can see, other than the Dow, which, as we know, is not exactly broad market exposure. But when you get into the S&P, which is obviously broad market, the Nasdaq, we had a very, very strong week. And this is really nice to see as well. So we talk about breadth in the market. So kind of expanding that breadth, getting not just the mega cap stocks involved in a rally. And that's exactly what we saw last week with the small cap stocks, Russell 2000, contributing greatly. So up 3%. So that was great to see. Nasdaq, of course, just keeps screaming higher. Tech stocks leading the charge. We'll talk more about that. And international stocks doing very, very strong numbers last week. So year-to-date performance, again, very, very strong across the board. The S&P is just absolutely screaming high. Russell now showing signs of life and kind of getting itself out of the basement, so to speak. So up about 2.62%. And the Nasdaq up almost 9% on the year. Just incredible numbers thus far. And foreign stocks doing very well as well, up 3.25%. So let's look at rates. Not a lot of movement here at all. Not any hardly to speak of anyway. So 30-year Treasury, 4.34, 10-year Treasury, 4.19, 2-year Treasury, 4.56, and a 30-year mortgage has kind of been hovering around that 7-ish mark for a while now, between 7.2, 7.4 for a while now. So not a whole lot of movement there. So let's talk about some of the factors here. So Nasdaq sets new high. This continues to kind of just be a technology and AI world, and the rest of the market is kind of just living in it. It's really driving a lot of what we're seeing in this rally. So stocks traded in a narrow band earlier in the week, but ended the 5 trading sessions with a powerful advance, while the Dow dipped lower. AI names, so artificial intelligence names, powered the gains in the S&P and the Nasdaq. So this is what we're seeing, this kind of AI-driven rally, but now it's kind of expanding its breadth a little bit, and so that's good to see. So the entire market is kind of rising. But Nasdaq bobbed around the 16,000 level for most of the week before posting consecutive record highs on Thursday and Friday, surpassing its 2021 record. So just absolutely astonishing numbers here. It was the last of the 3 major stock benchmarks to reach a record high this year. Economic news also helped boost the market. So the Personal Consumption Expenditures Index, that's a mouthful, the PCE, this is the Fed's preferred inflation gauge, so this is important. It rose 0.3% in January versus December and 2.4% on a 12-month basis. So both were in line with expectations, which is good. And so stocks ticked up on Thursday following the release of the report. So a lot of things really clicking and moving in the right direction right now, which is indicative of a very, very strong market. And this is also good. So consumers are remaining upbeat. And part of this is AI. So with all the excitement over AI, it's easy to overlook some key economic indicators that also speak to the underlying strength of the economy. So it's not just AI. Specifically the consumer data. So the PCE report we just talked about on the previous slide. So an end of the week's consumer survey revealed that while sentiment softened in February, it remained near a 32-month high. So fresh data this week also showed a jump in personal income, which is great to see. PCE report also reflected an ongoing consumer shift from goods to services, a sign the economy continues to normalize after the pandemic. So, and since 2/3 of GDP come from consumer spending, these consumer-related metrics help support the narrative that the economy appears to be gathering momentum. So again, all this is really, really good data coming out and indicative of just a very, very healthy economy. along with a very healthy market right now. The question, of course, remains, will the Fed be able to kind of ease up and start to cut rates later this year? The consensus is still yes. I think a lot of that is going to depend on how hot this economy continues to be heading into the spring and summer months. So we shall see. In part, that's, you want to see a strong economy, but going back to that whole good news is bad news thing, in terms of inflation and rates and those things and the Fed's actions, you kind of need the economy to do well, but not do too well. So that's kind of the environment we're in right now, but all things are looking really, really good. So nothing really to complain about right now. So key economic data this week, what's on deck. Monday, motor vehicle sales. That's always interesting. I'll keep an eye on that one. Tuesday, factory orders, ISM services index. Wednesday, we have the ADP employment report, JOLTS, and Beige Book. Thursday, Federal Reserve Jerome Powell's speech. This will be interesting. All eyes will be on the Fed on Thursday for sure. Jobless claims, international trade in goods and services, and productivity and costs. And Friday, we have the employment situation report. So big week for key economic data. We'll be hearing a lot about the strength of the economy or the healthy economy, and Jerome Powell's comments on Thursday should be always interesting. So companies reporting earnings. Again, we continue to kind of wind down this quarter's earnings reports. This will, we're kind of getting near the tail end here. So Tuesday is Target, Wednesday's Dollar Tree, Campbell Soup, Thursday Costco, and Broadcom and the Kroger Company. So that rounds out the news for this week, guys. I appreciate you tuning in. As always, we'll be listening and analyzing what occurs this week and report back to you next week. So really appreciate you tuning in. This is all of our information. If you guys need to contact us for any reason, we'd love to hear from you. And as always, hit that subscribe button down below if you haven't already. We'd love to have you subscribe to our YouTube channel and get all of our videos as they come out. Really appreciate it, guys, and we will report back next week. Thanks.